In this video, we will examine the recent performance of Mullen, a company in the EV manufacturing sector. We're going to delve into the key data points and the news updates, discuss the impact on the stock, and the sentiments among the investors. So let's explore these factors that will ultimately contribute to the company's stock movement and what you should do next. But before we go into more details, I just want to say that if you like my content, please consider to drop a like and to subscribe to my channel, and to consider to take a look at the computer gear links that I have posted in the description. These are the computer equipment that I use on a daily basis, and as long as you make a purchase using my link, whether you buy the linked products or not, Amazon may pay me a small commission, which will go a long way in supporting the channel. So thank you for your continued support, and without further ado, let's begin with today's video. Mullen experienced a disappointing trading day, failing to capitalize on the broader market rally, and the stock declined by approximately 4% at its lowest point, which indicates a very weak performance compared to the rest of the market or even the sector. Moreover, the pilot program that they recently posted regarding the Shoshone Native American tribe was negatively affecting the stock, which highlights a disconnection between Mullen's public relations and the investors' expectations. Now, the overall sentiment from the market about Mullen still remains uncertain, and there appears to be a lack of trust in the company's leadership, likely with reason, and also comes from the issues like reverse stock splits and the dilution concerns. The investors are now focusing on the company's ability to deliver on the products rather than these pilot programs and any sort of similar announcements. The short interest in Mullen stands at approximately 93 million shares, with approximately 70% of utilization rate. Now, there are some growth stocks experiencing short coverage on this particular trading day, but Mullen didn't witness a significant reduction in that interest. However, a portion of the short interest seems to hedge their bets, potentially indicating some sort of optimism behind the scenes. An interview with David, Mullen's representative, is also scheduled, and investors are very eager to get answers from several key questions, including the timeline for a potential stock buyback, the updates on the share count, the impact on the pending lawsuits, and so on. So this interview could provide some additional answers on the company's plans and future prospects. Investors are curious about the possibility of Mullen seeking an extension from Nasdaq due to recent events, as well as the company's considerations regarding a move to the OTC. The other thing is that some investors are also wondering if David would sell his, private jet in order to finance or to at least stand in solidarity with the rest of retail investors who may have been holding the bag after suffering severe losses. So basically, Mullen's stock performance has been disappointing, of course, with the broad market rally, with investors displaying caution and also more hesitancy. The disconnection between the public relations and the investors' expectations have also contributed to a climate with a lack of trust. So the upcoming interview is going to be very important and needs to address the investor concerns. It's very important for the investors to stay informed and to make well-rounded decisions based on reliable data and trustworthy answers. Now, with all that being said, let's also take a look at the technicals. The trading volume is around 224 million shares versus the average of around 500 million shares. Over the previous 52-week period, the price fluctuated between 10 cents and $25.75. The volume of shares traded tells us how many shares are being bought and sold at any given point, and if there's enough liquidity to support a trading strategy. If the float is very thin, it's going to be easy to push the stock price around, but with this kind of low liquidity, it also means that the exit is going to be kind of tricky. As we compare the current volume against the average one, there might be a possibility to show trend reversal. In this case, there's probably not going to be some sort of trend reversal, but let's just say that a recovery might prove a pretty long and serendipitous route. The market cap of Mullen is currently at 90 million shares versus the enterprise value of 17.3 million shares. So, as we compare the current price to the historical price, the stock is around 35% higher than the 1-month low, 35% higher than the 3-month low, and 35% higher than the 52-week low. On the options market, which often gives a hint on the market sentiment about where the stock price is going to go next, the implied volatility is 470% versus a historical volatility of 280%. The put-call volume ratio is around 0.03. Many stocks may have a higher put option volume than what they deserve, with the systematic purchase of put options to hedge against any sort of volatility if you have long positions. The most recent volume of options traded is around 28,000 contracts versus the 30-day average of 49,000. Regarding the open interest, the most recent volume of open interest is 978,000 contracts versus the 30-day average of 1.1 million contracts. Mullen is a publicly traded company operating in the EV sector, and it is listed on the Nasdaq Stock Exchange. The company designs, manufactures, and sells a range of electric vehicles, including cars, buses, and trucks. One of the key factors setting Mullen apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that the company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10, peaking at $15, before finally falling back to below $1. What this suggests is that Mullen has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why Mullen is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding Mullen remains real, and that the interest surrounding Mullen, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that Mullen shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards Mullen. Nowadays, it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of Mullen and to say that, you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price, including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, XPeng, or Mullen follows similar trends compared to Tesla. Of course, Mullen doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing iGos in Europe. So this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that Mullen is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning, to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So like I said before, the fundamentals don't necessarily help Mullen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Mullen. Because in terms of trading, Mullen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So currently, there is a significant position, around 40 million shares, that are being shorted against Mullen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock, forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, the short squeeze itself may never happen, just because there are a number of factors outside of anyone's control that will determine if the short squeeze is something that will occur. Now, my recommendation for Mullen, given all the circumstances, is to probably stand on the side due to the volatility risks being very high. And overall, I would say that at the moment, things are very much in the flux. But if you count out the solvency risk, I would say that it might be a good idea to start buying now for like the short to medium term speculation. So if you would to commit eventually, once the current sell-off is gone, I would recommend to commit between 0.5 and 1% of your portfolio in the stock, and would also recommend to split that allocation in batches of 20% at a time so that you can purchase more in case of further retracements.